Welcome everybody to another Wall Street Reporter interview. Today we have a very special guest. We have the thinking man of penny stocks. We have Peter Leeds, one of my favorite YouTube channels, really to get insights on markets, geopolitics, the big picture. I highly recommend you check it out. It's Peter Leeds on YouTube. Peter, welcome.
Hey, thanks so much, Mark. I'm glad to be here.
Absolutely, Peter. So, I mean, your channel, as I said, it's about really like the markets, the economy. So let's kind of start off with that. I mean, you've covered some really interesting topics in some of your recent videos. So, I want to ask you first, really, like, what's on top of everybody's mind? You have this massive volatility in markets. I mean, the Dow's up, I think, was up about 500 now. What's your take on this? Where are we now in the market cycle? What's happening with this coronavirus? What's your perspective here?
Typically, when you see this kind of volatility, it's either a market top or a market bottom. And I don't think that we're at a market bottom. I believe we're a lot closer to a top than a bottom. So this might be telling you something that the market is beginning to break down a bit and people are starting to pull a curtain back and see the reality of it. That's why when you see that the Federal Reserve does quantitative easing, and it has a big effect. Then you do quantitative easing 2, it has a smaller effect. Quantitative easing 3, smaller effect. It's a law of diminishing returns. This is what I say when I say that the Federal Reserve's lost control. They don't know what to do now, and all you're seeing is the people who are making the decisions are all fumbling around and trying things, trying to make you feel better, but we're all going the same way no matter what anyways.
Right. I had a conversation with, with another investor the other day, and right when this thing was happening with the Federal Reserve, and it just seemed a little funny that it's I think the way the coronavirus thing is being handled with Trump, the Federal Reserve, it's Trump is a great promoter. He's like the rah cheerleader guy, but he's not the guy that really has credibility when it comes to something like a pandemic. People. So maybe that's kind of took some confidence out of the markets.
Yeah, people are getting a bit spooked. But I said before the election, when Hillary Clinton was running against Donald Trump, I said, it's not going to matter who wins. Whoever wins this, whether it's Rand Paul, Donald Trump, Hillary Clinton, they're going to be overseeing a really hard time for the U.S. economy. And this is exactly what we're seeing. And I'm saying that this whole coronavirus thing, which I call the viral black swan, because no one saw it coming and it's having such a monumental effect. Yeah. What I'm saying is that it's a really bad situation, but it wouldn't have mattered. If there was no coronavirus, they would have been talking about trade wars. They would have been talking about something else, maybe the upcoming election, and that would be the excuse. Either way, the markets were way overextended, and they had to come down some way. The coronavirus just happens to be the perfect excuse because it is actually a real problem for so many people. But even without the coronavirus, the market still would have been going where they're going to go now. And I believe that's a lot lower than where we're at right now.
Yeah, it's usually at the top or the bottom. There's always some event that pops that bubble, whether it's a virus or this. There's always something. And maybe this time it's this coronavirus situation. So what's your outlook for stocks right now? I mean, you're saying this has been the top. What's your target for, let's call the Dow, the S&P?
Well, a lot of people are saying, how can you say we're even anywhere near close to a top because we just came down so much, 10% or whatever. I think that's just the beginning of the market starting to come back to reality, and that we're going to be going down maybe 70, 80% lower from here. No one believes me, but if you look at the Q ratio, which is basically you take all of the stocks on the market, all the assets, or have the cost to replace all the assets of those stocks, and every single time in history that it's gone above 1.0, we've suffered within a few years a major stock market decline of about 80% or so. I believe this is going to play out again exactly like it has every single time in history, and everybody tells you, it's different this time, but those are the four most dangerous words in the stock market, right?
I think also, I want to emphasize is to anybody watching is you're not a perma bear. You're not one of these doom and gloom guys.
Yeah, and that's absolutely. I don't want to be one of those guys. And you said it earlier, we were talking that I look at military events, I look at all sorts of stuff. The Federal Reserve, I look at stocks, I look at opportunities, new technologies. But it's that I try to look at everything. And there was a time when I was the most optimistic guy you'll know. And right now, I believe that I should be the most pessimistic guy you're going to talk to, because I do believe the next short-term time frame, short-term being a few years from here forward, that things are going to be getting a lot worse. And when things are turning around, or it's time to buy something else, then I'll change my position. But I don't want to be one of the guys who, like, every time you see them for over decades and decades, they're saying the same thing. Like they say, this is doom and gloom, or you have to buy gold, or you have to do this or that. I just look at everything that's going on, and I try and piece together what's the best thing for investors to think about doing for themselves.
Now, I saw in one of your videos, you actually have a very positive outlook for gold. So can you talk about that? Like, what do you see in gold right now? What's your upside target?
I think the big picture is overall a massive breakdown of control with the Federal Reserve and all these fiat currencies worldwide. And we're seeing it with all the money printing, even in Japan and Europe, let alone what we're doing here. And I believe that this is going to be a demonstration of, it'll cause a lack of confidence in currencies. And the result of that will be that things that are bought with the currencies will cost more of the currency to buy it. So things like commodities, cotton, coffee, they're all going to increase in price. But I don't know that the best way to invest is to try and invest in pork bellies or cotton futures. I'm seeing that gold, silver, precious metals are all going to do pretty dramatically well, in my opinion, going forward from this point on.
I think I saw like you had like a $2,000 plus target on gold, or you said it's going to hit new highs basically.
Oh, it's going to break through 2,000, no problem in my mind.
Yeah, I'm looking at the charts. I mean, it really looks like it could be, or it did look like it broke out, but things look pretty good. What would you? I mean, how are you getting positioned? Are you buying the miners? Are you buying the metal? What are you doing?
I have the physical metal. I also have some, metals trusts like the Sprott Asset Trust, where they actually hold physical silver and gold for you. But mostly I'm looking at a lot of the miners too, because if the price of gold goes up 10%, the miners might go up 100%. So you have a bigger impact or a bigger leverage by buying the miner. As long as the miner or the company and the CEO are people that you trust and you believe that you can rely upon them. Because if somebody drives their company into the ground, it's going to cost you a lot of money. Whereas if you buy physical gold or silver, it can't do that because it's a commodity, right? So I like to look at companies that I think are run by good management teams that are operating in economically, politically, militarily friendly regions of the world. Those are the types of things that I'm focusing on right now.
So what kind of shares are you buying? Like, are you buying the juniors? Are you buying producers? Like, what's your focus?
I don't do, well, almost exclusively, I don't do explorers. I don't want an exploration company. I want an actual producer, okay. A company that has found the resource, they're getting it out of the ground, and they're selling it. That is the best way to do it, especially if they have a good reserve life index of more than 10 years. How many years until the reserve runs dry at the current extraction rates? If it's only 3 or 4 years until the mine runs dry, you're going to see that the price earnings is going to be close to like 2 or 3, something ridiculous. And you say, why is this stock so undervalued? But it's because they're running out of the resource or the reserve. So I like to find a company with at least 10 years at the current production rate, and they expand their claims, and they have other claims they could expand if they need to, that sort of thing. And I do believe that the biggest winner from here going forward in the next few years is going to be silver mining companies. Okay. I believe silver is going to do even better than gold. I believe the silver to gold, or the gold to silver ratio is going to normalize closer to 40. It's about 85 right now. How many ounces of gold does it take to buy, or how many ounces of silver does it take to buy 1 ounce of gold? I believe that that is well overextended right now, and I believe it's going to normalize, meaning that silver prices will increase by more than gold. And when gold does dip, silver will dip by less. And over time, it will take only about 40 or 45 ounces of silver to buy 1 ounce of gold.
Okay. So can you talk about, like, maybe you want to mention some names that you like right now?
I like Avino Silver Mines is one of the ones. I even like get into the majors like Barrick Gold. I bought some of that the other day. I've been trading some options in Barrick Gold as well. Like say AKG, I forget the name of the company off the top of my head. I'm into that one. There's a whole bunch that I'm getting involved with. And as long as you trust the management team of each one, they're generally pretty much all on the same kind of level, if you know what I mean. If they don't have any big risk factors, and you know how much gold they're bringing out and what the cost is to take that gold out of the ground, then that'll give you an idea about which ones should be better. But I mean, there's too many options, actually. We just recently put out a mega monster precious metals report of all the precious metals stocks that we've picked for the peterleeds.com newsletter. And it was so long that some people said, well, can you weed it down to like the top 5? Because it was too long. It was 12 pages long, right? With the full analysis of each company. So now we've weeded it down to our top 5 favorites. And now someone asked the other day about, well, which would you pick if you just bought one? And I'm like, I can't tell you that. I'm just going to show you some good opportunities. You decide what you want to do.
And I think, as you say on your YouTube, you're wrong 100% of the time.
Yeah.
And there's also, you have the coffee. I saw you got the coffee mugs that have that slogan.
Yeah. We're giving away one. Actually, I have it right here. We're
giving
away.
Let's see that.
1 ounce gold coin. And we're going to give it away based on who picks which coffee mug is their favorite of all the coffee mugs that everybody sent in. And we got, the contest is closed, so please don't send any more mugs. Okay. But we've got 80 or so, and so we're going to put a big survey, get to the top 5, and then everybody votes on the top 5. And whoever wins that, we send them 1 ounce gold coin. We have runner-up prizes of the newsletter and my trading academy and all that stuff.
Oh, okay. Show us that gold coin again. Right? Put that up to the camera so people see that. We get it. All right.
Yeah, that's the wrong one. I got 2. That's the Canadian one. I'm going to give away the American one. Swiss Credit Suisse. I probably should just have these
the real deal.
And somebody said the other day, they go, that's the best prize I've seen as a giveaway on the internet ever. And I was like, thank you. Like, I thought that the whole time. Like, this is what a great prize. What is it worth? It's worth like $1,600. I'm just giving it away for free just to try and encourage my followers. I have a lot of loyalty to my viewers on YouTube. I had 650 subscribers. And I was thinking about giving up the whole thing, but it was their encouragement which caused me to keep it going. And that's what's led up to everything up to this point.
It's amazing. It's amazing. So yes, anybody watching this, definitely go to Peter Leeds' channel and you'll get some of that gold bullion. Whereas that's like the real deal. You know what is it? I think it was there was another newsletter guy. He's actually a tech. He was a tech guy. He's a tech guy. He was a Silicon Valley guy, and he said that he never like followed gold. He never understood gold. But once he held it in his hand, all of a sudden, he said the perspective changed. Like once you hold the physical metal in your hand, you look at it in a completely different way.
Totally. I totally get that. And I was saying this to someone the other day. I was holding up and going, you see this? We didn't open the package. It's in the shrink wrap package. And it went up $50 the other day just by sitting there. And that's what I think is so cool about it. It's real money before we made up all this fiat money that used to be backed by gold. That's now backed by nothing. So that's why I see that things like gold are going to have a renewed day in the sun, so to speak, because people have forgotten what the value of gold is, what the point of gold is, and what it can do for you. And I think people are going to get a big reminder of that in the next year or so.
Okay. So you think the next year or so we're going to see the big breakout?
I'm not going to make any timing calls, but I do believe that the longer-term trend for all precious metals, especially gold, and even more so especially silver, are going to be a lot higher in price, and that's going to spill over to the miners who look for that actual metal. We've already hit peak silver. We're running out of silver so fast, and the cost to get it out of the ground is more than the value of the silver itself. That results in a lot of mines pausing production, shutting down, closing operations until the prices get back higher. So the demand actually shrinks on its own. It takes care of itself. Longer term, I believe that precious metals will go a lot higher based on the demand constraints right now that we're starting to see.
Okay. And, one other thing that, you've been talking a lot about Bitcoin. We just had Charles Nenner on the other day. And he's neutral. He's not a Bitcoin, he's not a Bitcoin fanatic, but he thinks it can go back to 20,000. What's your take on this?
I talked about it when it was at 20,000. Within a few days, I called the top. And that was a day where I really didn't want to go film a video. I felt like doing nothing. And I remember that I said, I need to do it now. I went and I called the top. And I was pretty close to the very top. I was past it before, but pretty close to it. And I said that the problem was the fragmentation and the saturation. Saturation being everybody who's got money to put into cryptocurrencies that is involved in this kind of concept or understands what's going on here, a lot of them are fully invested or close to fully invested. Not a lot of money on the sideline to go into cryptocurrencies. The fragmentation is that there's just so many options. There's first there's one option, then three, then five, then now 5,000. So if you do have $100, do you put it all into Bitcoin specifically, which is what most people do, or do you disperse it among 5,000 options? There's too many options, and I say that I'm not against cryptocurrencies. That's what people misunderstand. They take what I'm saying the wrong way. I'm saying this is how to fix it. If you want cryptocurrencies to do really well, take the 5,000 options out there and constrain it down to 10,000 or to 10. The fewer cryptocurrency options, the stronger each will become.
Okay, yeah, that makes a lot of sense. What about kind of let's talk about you're kind of best known for your expertise in penny stocks. You have a newsletter. You wrote multiple books. How did you how did you get interested in penny stocks? Like, what is it that you find compelling about that market?
Well, I'll tell you that when I got started, I was 14 years old, and I bought my first penny stock, and I went about it all wrong. I did everything wrong, and there's no one out there to create this information for me to learn from. I had to figure it out the whole way, just raw, without knowing what I was doing. I lost all my money in about 10 days, 12 days, or something like that. And for a 14-year-old kid, and it was money I worked for and saved up. It was all the money in the world. It was like 3,000 some odd bucks, and I lost it all within 10 days.
That's a lot of money when you're 14.
Yeah, and so I want to undo that mistake, and I've undone that mistake hundreds of times over, but I also don't want other people to go through it the same way I did. When there's such obvious mistakes that can easily be avoided, that's why I wrote Penny Stocks for Dummies. That's why I have the newsletter. That's why I do all these YouTube videos. I'm trying to help direct people to avoid the easily avoidable pitfalls that are all around you.
So what's kind of like your strategy? Like, what kind of stocks do you look at? Like, maybe what's how do you kind of pick the winners from the losers? And there's extremes in the penny market.
Oh yeah, and there's so many options too. There's 50,000 of them out there, something like that. We just basically do 80% fundamental analysis, and you got to remember that just because the share price is less expensive, it's still just a share of a company. So if you understand how that company is going to do, then you know how the shares are going to do, because they usually will follow suit. So you don't look at a stock and go, oh, it's 50 cents, so it's a better value than when it was at $1. You look at a company and say, is it worth 50 cents, and why? And where's it going to go, and why? And so you look at 80% fundamental, all the spreadsheet, balance sheet, the income statement, all that kind of stuff, and who the management team is. Then we look 10% technical analysis, looking for a good buying opportunity. And then 10% what we do is we look at the third level analysis, which is about the positioning, the marketing, and the branding, and all that kind of stuff. That's the stuff that most analysts don't look at. But all of this that we talk about, if you go to peterleeds.com in the learning section, we have all 29 points of the 29-point leads analysis process, which we use to uncover the winning penny stocks and winning low-price shares.
Okay. Are you focused on like some of the themes? Are you looking at like cannabis, gold, or are you just just looking for companies which have good fundamentals?
Well, we're looking for opportunities, and the opportunities which are going to survive in this kind of market right now with the coronavirus going around. Then that's different, because that's a factor that matters. And so it changes what kinds of stocks we look at. For example, we're looking at the pot stocks, and it was such a crowded trade. Everybody's asking me, hey, Peter, what do you think about this pot stock or that pot stock? And I said, it's a crowded trade. There won't be any money to make here. And so we stopped looking at pot stocks, so we don't have anything to do with them for a little while now, until it becomes less of a crowded trade and there's opportunities there. Then we'll look at it again.
Okay, so you think so? Basically, like, I mean, they've been kind of they've been crashing. I mean, are you basically looking to get back in kind of when they bottom out here? I mean, do you think this is going to be that's going to be the contrarian trade at that time?
Well, I'd get back in when a lot of the industry gets washed out. There's a lot of companies in the marijuana industry which need to go bankrupt. They need to clear out before the industry itself will build and grow, at which point then you can get involved with some companies that might benefit from the whole cannabis craze, so to speak. It's just like with the cryptocurrencies, there's so much fragmentation that there's not going to be an opportunity as much for anyone right now. Until the fragmentation becomes more narrow, focuses a bit, when it starts consolidating a bit, that's when the opportunity is going to be there. So we're looking sort of peripherally at pot stocks and things like 3D printing and cryptocurrencies, but I don't believe that it's the time to buy any of these right now.
Okay, and now in terms of like the penny stocks, just to be clear, like what do how do you define a penny stock? Like is there a price point? Is there a sort of a fundamental? Like what's your definition?
Well, we do go by the price point, so anything $5 or under, okay. And that's also the Securities Exchange Commission's definition too. And so all the brokers go by that. So the best way to do it, you find, is to go by $5 per share or less.
Okay. So, and do you look for companies which already have like fundamentals? They have, like you mentioned, like balance sheet revenues, or do you also look at things which are basically story stocks, so it's just pure concept, minimal revenues?
Well, that's one of the things we try to avoid is the story stocks specifically. If somebody says, look at this company, it's got a cure for whatever, or it's got an engine that runs on gravity or something like that, we get the heck away from that. But what we do look at is things that we think have a good market share, a good footprint in their industry. They're growing in revenues one quarter after the next, and the management team knows how to convert that from revenues down to the bottom line to the earnings. If they can do that and they can do it consistently, then we're going to be looking at every single aspect of that company. We put it through the full 29-point analysis process because, especially with a low-price stock, they're a lot smaller. One single thing can completely derail the company. One lost customer, one lawsuit. So you got to be so careful. That's why I love getting started like I did in penny stocks, because it's kind of like a proving ground. It's a lot harder to find a good penny stock to invest in that works out well than to look at IBM or Google or Microsoft. That's a big difference there, So it's a lot easier when you do it with penny stocks first to then look at blue chip stocks if you want to analyze them.
That's an interesting perspective. And you also mentioned the management. How important how important is management, the quality of management for you, in the decision-making process, and how do you determine that?
It is not the most important thing, but it is up there. And what I like to do, is if you have a CEO of a company, you look at what did they do before this job? What did they do in their last company or the job before that? Did they go bankrupt in 2 companies in a row? Now they're running this one. It's a bit different than if they had a lot of success previously. And I'm purposely not going to mention the name of the company because that's a penny stock, so I don't want to make it look like I'm promoting it or something. But the CEO of the company that I like now, his last job was with IMAX, those big movie theaters. He basically ran that and got it to become a much bigger company. And now he's running this company that I like. And so I can have more trust in him that he at least knows how to do it at least one time, hopefully twice.
Okay. Yeah, that's important. So can you maybe take us through a couple of examples, like some recent companies like that have been winners where your strategy worked out for?
I couldn't even begin to know where to start, Mark. I would Stephanie does all the analysis and the research now, whereas I'm more the promotional side of the business. So I don't look at the actual stocks so meticulously now as I did up until the last few years.
Got it. Okay. So the newsletter. So basically, for people to get the current picks, they have to go to peterleeds.com to get the newsletter.
Yeah, we have it there, and we've got, if you want to learn about trading charts, if you want to learn about how businesses work, we have all of that. But there's also the free stuff with the YouTube videos. I'm trying to, for free, help out people and give people my perspective, which is wrong 100% of the time. But when I am right, it works out pretty well. So I want to give people my sort of philosophy. And this is what a lot of my new book is about. Stockology is about the way I think and how it's different than the way most people think. And that's why it sort of led me to a lot of benefits in this career that I wouldn't have otherwise experienced.
What is the book about? You said it's coming out soon, so maybe you'll give us like a little tease for the audience. Like, what is this all about?
It's about the psychology of investors, and I believe that this is the missing piece of investing. Everyone thinks about fundamentals, they think about technicals, but they're not looking at the way people think and the way that crowds act and move. And I believe that if you have that understanding added to the fundamentals and the technicals, you have a full balanced breakfast, basically, and then you're going to have a lot more success by knowing what other investors are going to do before they do it.
Yeah, so I guess the psychology, you mean things like, what's it, buy the rumor, sell the news, things like that?
Yeah, lots of stuff like that, but also, too, in terms of looking at, say, the Japanese trading charts, Japanese candlestick charts, you can tell when people are getting tired of the move or a trend, or it's going to reverse the direction of the trend. You can tell because of the patterns that show up, which are based on the decisions people make because of the way that they think. So it's kind of a long-winded way to say it, but the whole point with the book is I'm trying to make it a lot more understandable and simple and quick so that it'd be a nice, easy read. You could do it while you're taking a flight from Manhattan to Toronto or something. You just flip through the book,
45 minutes? That's a 45-minute read?
Yeah, well, maybe 450 minutes or so.
So the psychology, the sentiment, that's a big part of this, basically.
Especially now with the way the markets have been trading. There's so much psychology going on right now, which is causing a lot of these drives. And people point to stuff. They'll say, well, that's because the Federal Reserve is going to lower interest rates by half a basis point or whatever. There's so much going on in people's minds that if you have an understanding of it, you'll get a better idea about where everything's going to go next, in my opinion.
Which is wrong 100% of the time.
Yes, correct.
So what... getting back to the coronavirus thing, yeah, I was just speaking with, was it Mark Faber? I mentioned to you, he's saying that this is gonna kind of change really society for quite a while. What's your take on this? Is this a short-term thing, or is this gonna have a lasting impact?
I think it's already changed society quite a bit. I mean, we have PDAC, Prospectors Developers Association of Canada. It's the largest trade show conference convention in the world ever. And we had, my father was going to it, Stephanie, the senior analyst, was going to it, and we canceled both of them. And all the interviews we had set up got canceled as well because everyone's scared. Everyone's coming from all over the world into Toronto. They're just going to have a mixing pot of coronavirus, basically. So they just backed out, and we're not sending anybody to that. I believe, though, that it's already affected things more than people are realizing. People are talking about the supply chains downstream being affected for a lot of companies. But a lot of these supply chains that have been changed now, it involves thousands and thousands of workers on that end of it. So a company needs thousands of workers to put something together for them. And then all of a sudden that supply chain is disrupted. How do they replace those 1,000 workers? And this is more of an example of somebody like Apple or a big company. But there's plenty of mid-sized companies that are getting their supply chains absolutely disrupted right now. Long story short, it's going to be a lot longer than, even if coronavirus goes away, it's still going to be another 6 months before everything gets back to normal.
Yeah, it's definitely. I think, what is it? The fear really is that people, it's not so much they're not scared of the virus, is that they're scared of of being quarantined for 2 weeks or somewhere.
Exactly.
That might be the worst thing. One thing again, I kind of consider you in that sort of in that group of big thinkers, like the Jim Rogers, the Mark Fabers. We're at the start of a new decade right now, and what each decade kind of really does kind of start with there's a theme for each decade almost. We had the housing. The last decade started with the housing crisis. You had the 90s with the Berlin Wall. You had the 20s was the Roaring 20s. What do you see? What do you think is going to be the big theme of the 2020s?
I have to say, because you mentioned it, I got a piece of the Berlin Wall sitting right beside me here on my desk. That's what I keep it right there. I always know that. But I believe that this is going to be, first of all, right now it's going to be all about the virus, but that will fade away eventually, hopefully. But beyond that, I believe it's going to be the pulling back of the curtain. I think that people are way offside here. They're way out of base. They're expecting that stocks should be where they're at, and they absolutely shouldn't be. And there's going to be a big reckoning, so to speak, maybe even an economic reset, maybe some, I don't know about this, and I don't think this will happen. People are talking about debt jubilee or debt forgiveness. There's going to be a big shakeup, and I believe it's going to be more detrimental to most people than anyone's expecting.
Okay. That's sort of I haven't heard that yet. So this is one of those. This could be one of those things that nobody's talking about.
Well, I'll say, Mark, that I hope I am wrong.
Yeah.
And there's been a time where I would tell people, yes, buy this stock. It's going to go up in price, and the reasons why. That was years ago. And then I'm watching things, and what I'm seeing is it's all telling me, it's all pointing to one place. I think that people are absolutely out of their minds to not realize that the stock market has to come down.
Okay. And so basically, you're bullish on gold, bearish on stock, on the market. What about, so in your newsletter now, like you're recommending stocks, like what would would these stocks be affected by a market downturn, or are these kind of like those? There's always a bull market somewhere, they say, right? So what's...
Yeah. Well, that's a lot of what we're doing is we're trying to find the stocks which will survive better as we go into a recession, which I believe 100% is coming up. And as we go through the session, a lot of the companies which will do better are more defensive ones, and there are also ones which are going to help other companies and people save money. So if we find a company that's going to help another company or another person save so much money in a recession, that company will be in more demand. Or, for example, with the coronavirus, there's a lot of stocks like Alpha Protec, we talked about, APT, which when there's the Ebola outbreak, the stock price just went through the roof and it came back down. That's another one that we're looking at with this coronavirus, which might do well. It sells a lot of protective equipment, that kind of thing, masks.
Okay, so yeah, so there's always an opportunity somewhere. But like outside of like, possibly, maybe like a reset in the markets, what else do you see happening, like, this in the 20s? What do you think will be some of the big themes? Do you see any, like, big themes emerging, in the markets?
Well, I could tell you what I hope would happen, but I really doubt this would happen, is that I think that we've lost our way. And I think that most places should do things such as go to a flat tax, make things more understandable and easy for people so that there's less people taking advantage of the system. No country which ever went to a flat tax has ever reversed and gone back to the way it was before. It makes no sense that my accountant sometimes doesn't even know the best way to do things because there's so many options. Why can't we just all pay a flat tax? It would be a lot easier, there'd be a lot less waste, and there'd be a lot more convenience of how we're going to use the money. I believe that there's been we've lost our way, gone off the track a bit, and people are taking advantage of the positions. I think we need a full reset, almost like a French Revolution, that kind of thing. But I'm not trying to encourage anyone to get violent or anything like that. That's what I'm saying. I'm saying that there's a better way to do things. It's obvious to me, and we're not doing it. And I hope that we can correct this before it's too late.
Okay. And hopefully you'll I saw one of your videos. You're getting this the solar powered yacht, which
yes.
In theory, I guess you could live on it. Then in case anything goes bad here.
Go off the grid, get a water maker and a fish pole, and I just disappear, man.
It's solar powered. It's quiet. Everything is there. Okay.
Yeah.
Peter, on that note, I want to thank you again, and we look forward to following up with you soon.
Right on, Mark. I appreciate it. Thank you.